Breaking news. The value of the Russian ruble has dropped to its lowest level against the dollar in 17 months. In the opening minutes of trading, 135 rubles bought $1. This morning marked the first time since March 2022 that the Russian ruble had dropped below 100 in value against the US dollar. At today's opening price of 100.35 rubles to the US dollar, the ruble has lost nearly 25% of its value against the dollar since the start of the year. Ukraine's currency dropped to its lowest level against the dollar in 17 months following the start of the Russian invasion of the country, making it the third worst performing currency among emerging market economies, behind the Turkish lira and the Argentine peso. Maxim Oreshkin, economic advisor to Russian President Vladimir Putin, blamed easy monetary policy for the ruble's recent decline in an interview with TASS news agency. The current exchange rate has deviated significantly from fundamental levels, he said, adding that a return to more normal levels was imminent. Oreshkin elaborated, saying, "It is in the interests of the Russian economy to have a strong ruble," adding that, "a weak ruble complicates the economy's structural transformation and negatively affects the population's real incomes." A decline in the value of the national currency started in September of last year, when Putin announced a partial mobilization. The Bank of Russia stated that the declining trade surplus was to blame for the ruble's depreciation. On Monday, President Vladimir Putin's economic advisor said that Russia was interested in a strong ruble and that loose monetary policy was the main reason behind the weakening of the Russian currency. The ruble then fell past 100 per US dollar. The ruble's value against the dollar dropped to 100.4975, its lowest level in nearly 17 months. Putin's invasion of Ukraine in February 2022 caused a 25% depreciation of the ruble against the dollar. Maxim Oreshkin, Putin's economic advisor, wrote an opinion piece for the TASS news agency shortly after the dollar hit 100 rubles, stating that the Kremlin wanted a strong ruble and expected a normalization to occur soon. Oreshkin wrote that the current exchange rate has diverged significantly from fundamental levels, and that a return to normalcy was imminent. To paraphrase what he said, a weak ruble complicates the structural transformation of the economy and negatively affects the real incomes of the population. A strong ruble is beneficial to the Russian economy. Since Russia invaded Ukraine, the ruble's value has been all over the place. It hit a record low of 120 to the dollar in March of last year, but has since recovered to a more than 7-year high thanks to capital controls and rising export revenues. The pre-war value of $1 was roughly 75 rubles. The Bank of Russia has stated that the sharp decline of the ruble this year, around 30% against the dollar, is due to Russia's deteriorating balance of trade. The surplus of the country's current account decreased by 85% from January to July of last year. Oreshkin laid the blame at the feet of the central bank, revealing tensions within Russia's monetary policy establishment. Oreshkin attributed the depreciation of the ruble and the quickening of inflation to loose monetary policy. The monetary authority is equipped to restore stability and bring down interest rates to manageable levels. After keeping rates at the same level since September, the central bank increased them by 100 basis points in July, to a total of 8.5%. The bank has been sending signals that more rate hikes will be necessary at its upcoming meeting in September.